You're listening to Gold as Wealth Insurance by Rich Checkan of Asset Strategies International.
You don't have to raise your hand, but just a quick show of hands. How many people have gold in their portfolio? Good, good. So we have some believers here. You don't have to answer this, but I'm wondering by the time we get done if maybe you could pull me off on the side. I'm just trying to get a feel. How many are in it for speculation versus how many are in it for wealth insurance? Again, don't answer now. If you could, just come talk to me. I'm just looking for a little feedback. I have a philosophy that everyone that buys gold from me says, yes, Rich, I'm buying it as wealth insurance. But I think whether they say that or not, everybody's buying it both for wealth insurance and speculation. And depending on their comfort level, et cetera, they're either more interested in speculation or less interested in speculation. But I think there's always both components. Because if you're buying it for insurance, you shouldn't come to me a week later and say, how come my investment went down, right? But I'll get into a little bit of that. I'm going to give you some real world examples today of how wealth insurance works with gold and how people tapped into that to protect their portfolio. So it's being recorded, so I think I got to wait another minute here to start. If you haven't filled out, any late arrivals, if you haven't filled out the little slip of paper, it enters you to win a 3-coin silver set from the Perth Mint that we're raffling off. And it also gets you for us to send you our free newsletter via email. So we don't sell, give away, or lose that information to anyone. You'll only hear from us. And if you don't like it, tell us. We'll make it stop. I only want to send it to people that are interested, but I think you'll find it useful. All right, and I think it is time to get started. So welcome, everyone. Thank you for coming. My name is Rich Checkan. I'm the president and COO of Asset Strategies International. We're a 37-year-old Rockville, Maryland-based firm that basically, I call ourselves a full-service tangible asset outfit. We buy and sell gold, silver, platinum, palladium, bars and coins. We buy and sell foreign currencies for delivery abroad or repayments into the U.S. And we deal with rare coins, or commonly referred to as numismatic coins as well. Today I'm going to focus on gold, bullion as wealth insurance. First off, I want to start off with a little story that kind of leads into some of the tough decisions we're always asked to make when we're individual investors. There's this wonderful couple, Mary and Maury. They were coming up on their 50th anniversary. They were a Jewish couple, and they had never been to the Holy Land in Jerusalem. So they decided that this was going to be their 50th Jubilee celebration. They were going to go visit the Holy Land for 2 weeks. The date came up, they went down. The first week was absolutely fantastic. They hit all the sites. It was wonderful. Everything they imagined and then some. Unfortunately, at the end of the first week, tragedy struck. Maury passed away at a heart attack. The coroner came down, assessed the situation, said it was a massive heart attack. And he said, I know it's tough at this time, Mary, but you have to make some tough decisions. The first thing is, where do you want to bury Maury? We can bury him right here in the Holy Land for $50 US. Or I can pack up his remains, send him back home for $10,000. And Mary's sitting there thinking about it, and the coroner's getting a little antsy because he thought this was kind of a slam dunk no-brainer. He could be buried in holy ground for $50 or sent back home for $10,000. So he pressed her and he said, listen, you may not have understood, $50, he could be buried in holy ground. What would you like to do? And after a little more thinking, she said, you know what, go ahead and send him home. And he's like, okay, she's clearly distraught. She didn't understand. So he said it one more time. He said, you understand it's only $50 to be buried in hallowed ground. And she said, 2,000 years ago you buried a guy, and 3 days later he rose from the dead. I just cannot take that chance. So we all make tough decisions, I guess is the point. Mary had one. We have some every day as we're looking at our portfolios, trying to figure out what to invest in. And for many, especially if you have a stock or bond orientation, gold is one of those things that you get or you don't. And even if you get it, a lot of times, I just had somebody at the booth tell me, I get it and I think I should have it, but it's too hard. I don't know how. And it's really not that hard. And hopefully I could dispel some of the myths here. So why am I talking to you? I work for a company called Asset Strategies International. I've been with them since '96. My uncle and his partner founded the company in '82 in Rockville, Maryland, so we're a 37-year-old company. We deal, as I said, in precious metals, foreign exchange, rare coins. We've been known over the years for innovation. One of the things that we've done, we have our friends here from the Perth Mint in Western Australia. We helped them design what at the time I believe was the most cost-effective, safest method of owning gold, silver, and platinum, and that's the Perth Mint Certificate Program. We helped them launch that 20 years ago now, in '97, a little over 20 years. Fantastic program. It was super cost-effective. And since then, there have come cheaper ways of owning precious metals, and they're right on the cusp right now of innovating again and offering an even cheaper solution that I'll talk briefly about at the end. That's not why I'm here. I'm not here for a sales pitch. Customer service is really what set us apart. If you look us up, you'll find that we have like 0 complaints in 37 years. It's because we always take care of our customers. We'll go full 9 yards to go ahead and service their needs. If they're unhappy, because we're not perfect, we're human, a shipment could be delayed or what have you, but we're always on top of it. And we look to take care of our customers and make sure they're happy always. And I think you'll see if you dig that our reputation is flawless, and I'm proud of that. We always put the customer first. Main topic, gold. Very misunderstood. A lot of people look to gold and they will compare it to the stock market, right? They'll say, well, why would I own gold? It's a dead asset. It doesn't have any interest, doesn't kick off any dividends, right? It just kind of sits there and does nothing. In fact, in many cases, it costs me money because I've got to pay money to store it or ship it around or what have you. Why on earth would I own that? And if you look historically, the stock market outperforms gold. They'll make that argument, right? I think they're missing the boat. I think when it comes time to make money, you look at equities markets to do that. You don't look to gold to do that. Now, caveat. Gold and silver just broke out in June through 1350. They're trading about 1514 today, and we believe that the next bull market has begun. You catch that at the beginning, you can make money in gold, and people will be pouring in to do that. But for me, that's not why you own gold. You own gold as wealth insurance. And I'll talk about what that is. And in that respect, it is essential. I think everybody should own it. I could tell you in 25 years now working for this company, I do feel like a missionary and an evangelist in the U.S. When I go to the Far East and I talk to them about putting 10% tops of your assets into gold, they say, why so little? When I go to Europe, they say the same thing. When I say that in America, they say, why so much? Because they have like no liquidity in their portfolio. This is why I think you need to have gold in your portfolio. And it's not specifically Ben Bernanke, but he made this announcement, and this is a quote, and I want you to kind of dig into this a little bit. If people feel, emphasis is mine, that their financial situation is better because their 401k looks better, or for whatever reason, their house is worth more, they're more willing to go out and spend. That's going to provide the demand that firms need in order to be willing to hire and invest. This was after the financial crisis. He made this announcement as they were trying to figure out all the QE to bail them out and all the unprecedented steps the Fed took to try and ameliorate the situation. This is all smoke and mirrors. Okay, this is what happens with a fiat currency. They don't care that you're wealthier. They don't care that your assets are growing. What they care is that you feel like they are. Your house is worth more in dollar terms. Your portfolio is worth more in dollar terms. But obviously what they were doing was they were inflating the money supply. Therefore, they were inflating the currency, diluting the currency's purchasing power. And the same asset, whether it be a piece of real estate, a can of Coke, a gallon of gas, all cost more in dollar terms, but that's not an increase in wealth. That's a decrease in the purchasing power of the US dollar, okay? And we're not the first country to do this. Every country that had the worldwide financial domination, if you will. You go back to Greece, Rome, Spain, they all did the same thing. The British pound at one point was the world's reserve currency, okay? It's no longer. And I'm not saying we're going away tomorrow. I don't see any contenders to fight us for that position. But I can tell you the world's not happy with how we're managing that, but it's nothing new. They used to clip silver coins in the days. Anybody ever hear the background of the tally stick? You ever hear the expression, what's the tally? Okay. Well, what this was is they basically would mark on a wooden stick how much the government, the king in England, took from you because the government was broke and needed money. And that was kind of their loan slip, if you will. And then what happened when it became too much for them to pay back? Do you know what happened to all the tally sticks? They threw them in the fire and burned them. Debt resolved. Okay? That's where that expression comes from. This is not the first time this has happened. Governments have really been bad managers of our currencies for years, fiat currencies. They have a tough time saying no to spending, and they only have limited resources in terms of income from taxation and so forth that the people can stomach. Okay? So wealth insurance, this is my definition, is a store of purchasing power in a liquid form or in a form with high liquidity for a potential financial crisis that you hope you never have. So somebody was asking me at the booth earlier, how do you manage it? What's your strategy for managing wealth insurance? And my strategy is this: I buy it and I never sell it. That's my strategy. Usually 5 to 10% of net worth. It's not a magic number. We didn't throw a dart at the wall and say, what should we tell people they should own? They've done a number of studies, and what they came up with is with different currencies and different bond stock equity mixes and different mixes of gold in a portfolio, they found that really 8% is the number, that at 8%, you tend to see stronger returns for the overall portfolio with minimized risk. If you own less, you tend to not get the same results in terms of performance and ameliorated risk. If you own more than that 8%, you don't get the same return, okay, or the same reduction in risk. So it's kind of a sweet spot of about 8% of gold. We usually tell people 5 to 10% just because the math's easier. Okay, but I don't think that's the biggest thing to fall your sword on, but that's why we usually come out with that number, how much gold to own in a portfolio for wealth insurance. It definitely enhances and then performance and minimizes risk. Now, I buy it and I hold it, and I never get rid of it unless I have a need. I'm going to talk about some of those needs and how that works going forward here in the presentation. But if I have a need, if I have some sort of financial crisis, I do not hesitate. I sell that gold immediately. That's what it's there for, okay? And then, over time, after I've met my financial need, I try to backfill and replenish and get back to the point where I have the right mix again. That's how I deal with it. Well, what if I'm just one of those lucky guys who never has a financial crisis and I don't need to tap into that gold? I pass it on to my heirs, give them a start in life. That's the way I look at it. Now, that works for me, may not work for everybody, okay? But that's how I deal with gold. Store purchasing power, high liquidity for potential financial crisis you hope you never have. The reason we do that is what I was talking about with the tally sticks and clipping of silver coins and what Bernanke was talking about feeling good as they jacked up the money supply. Think about how we measure purchasing power or how we measure value, right, of any asset. We measure them in dollars, right? You can't tell me how many cans of Coke it takes to buy your home, can you? But you can tell me how many dollars it takes, right? You're not going to be able to tell me how many marbles it takes to fill up a tank of gas, but you know how many dollars it takes, okay? So we're measuring everything in dollars, and I think we have it wrong. Because a unit of measure should be what? To be reliable, what should it be? Stable, constant, shouldn't change, right? So think of the analogy. Let's say I want to measure the distance of the stage or the length of the stage, and I use a 12-inch ruler, right? So I take my measurement and I come up with whatever it is, I don't know, 4 feet for this section. And then I come back tomorrow, I clip an inch off the end of my ruler, and then I measure it again. Am I going to get the same result? That's what's happening with dollars. I think we have it backwards. Gold is a constant. Gold is a stable, constant store of purchasing power or value, has been for 5,000 years. We should be measuring everything, dollars, gasoline for the tank, can of Coke, whatever, in gold, because that's a constant. We don't measure time in something that fluctuates, right? We don't measure anything with a unit of measure that fluctuates. Gold is your constant. You've all heard the example, I think, bless you, sir. I think you've all heard the example where, if you bought a new toga in Roman times, it cost an ounce of gold, right? That was the business suit of the day. In turn of the century, 1900s, a business suit, anybody know what it cost in dollar terms? $18, okay? How much did it cost in gold terms? 1 ounce of gold, $18, okay? Today, gold is at $1,500. Can I get a nice new business suit for $1,500, 1 ounce of gold? I think I can. I don't even have to go to a thrift shop for that. I'll get a really nice suit for $1,500. Can I get it for $18? No. Measuring wealth. I think gold is the way to go. We have our measuring sticks wrong. The case for gold. And I have some handouts, if I could ask you to assist. I don't really care if anybody wants them, grab them. I think they're important tools to use when you're talking with grandkids, kids, et cetera, about the value of money, mismanagement of currency. I've got some Zimbabwe dollar notes. I've got some Venezuelan notes. I want to pass them around because these are examples of modern failed currencies. Okay? In 1980s, do you know how many dollars it took to buy a Zimbabwe dollar? Anybody? And what does it get you? You can't get anything. Our CPA took a whole bunch of 100 trillion Zimbabwe dollars to Zimbabwe and tried to buy a pack of gum. And they wouldn't sell it to them. They'd take euro, they'd take dollars, but they wouldn't take any Zimbabwe dollars, okay? Back in the 80s, Zimbabwe is a thriving country. And I want to say it was like either $1.60, $1.80 for one Zimbabwe dollar. So the Zimbabwe dollar costs more than a US dollar, less than two. Now you can't buy a stick of gum for 100 trillion Zimbabwe dollars because of the mismanagement of that country. Venezuela, most recent example, we saw it play out in front of our eyes about how a currency in a country rich in resources can be mismanaged, mishandled, and the currency completely and utterly worthless, okay? Bear Stearns and AIG. Anybody know what happened to the price or the stock market the day the news of Bear Stearns and AIG happened? Went up or down? Two options. Down considerably. What happened to gold that day? Went down too. Okay? The next day, what happened with shares? They continued to fall, right? What happened with gold the very next day? Went up. Why? What was going on back then? Anybody know? All right. People were taking money out of their piggy bank, otherwise known as a house, right? That was their ATM that they lived in. And they were putting it into the stock market, buying leveraged accounts, right? Taking it on margin and buying stocks, bonds, all right? And then AIG and Bear Stearns stocks collapsed, okay? What happens when you have a margin account and the value of the underlying assets drops through the floorboards? What do you have to do? You have to make the margin call, right? You have to come up with cash quickly. Where did people go for that cash? They sold their gold. They sold their silver. They sold their platinum, right? They could get money for that immediately in their accounts, meet their margin calls, and start over. And in the meantime, people saw the drop in the gold as people were selling it to meet margin calls, and they came in and they swooped and they bought bargain price gold, silver, platinum, palladium. Okay? Real world example of gold protecting people's assets. Because what's the alternative? If you can't tap into your gold to meet that margin call, what are you doing now? Selling your house, selling all your possessions to try and meet it, or just losing all of the assets that you had on margin, right? Okay. Libya. This is an ignoble example of gold acting as wealth insurance. And I just got to say this up front. I am not saying Muammar Gaddafi is a good guy or a smart guy or anything. I'm not building him up. I'm just saying that unlike most countries that store most of their country's central bank gold in New York or London, Zurich potentially, he chose to hold his central bank gold in Tripoli, right? Okay, so you remember when they were revolting and he was under pressure and the world cut him off from financing, right? He had no access to international accounts, etc. He lasted a good long time after that. Why? He had gold and he had it right there in his possession to meet his financial crisis immediately. He was able to trade that gold with weak, friendly neighbors on his borders that would give him munitions, food, uniforms, whatever, okay? He should not have lasted as long as he did. He lasted longer because he had access to his gold right there. Again, not propping him up. He's not a hero. I'm just saying, in this case, he was able to last longer than he needed to because he had financial insurance. Anybody remember the Asian flu? That's when all the emerging markets, tanked. Anybody know one of the first countries to come out of that? Korea. Why did they come out sooner than many others? Because their citizens willingly turn in their gold and they use that gold to take care of business and start propping up their currency and start moving back in the right direction. So gold for that country turned things around quicker than a lot of the other folks affected by the Asian flu. This one may hit home, it may not, but I'm going to talk about just one of our clients. He's actually a mutual client of ours at Perth Mint. So 20 years ago, Stu and his mom started buying silver. His mom did not get it. She did not like it. She did not understand it. She did not want to do it. But Stu, her son, believed in this immensely, and he started buying silver at the Perth Mint through us. Okay? He bought a lot of silver over about a 15, 20-year period. And then 3 years ago, and it appreciated over time. If you call it appreciation, i.e. the dollar weakened over time and each bar of silver cost more in dollar terms over time. But about 3 years ago, he was in a pretty serious car accident. And it had complications, okay? Because he had a weak heart coming into that accident. So what did the insurance company do? Did they cover all his medical bills or did they walk away and say he had a pre-existing condition? What do you think? They walked away. Okay, so he had slightly over $1 million in medical bills, and he could not pay for it with insurance because they denied him. His mom started selling the silver. Didn't sell all of it, but sold a bunch of it and met his medical needs. Okay, she's a believer now, I could tell you. Okay, last case. Do you guys remember? I do. I don't know how old you think I am, but I do remember this. Do you remember the images of the refugees getting on helicopters from Vietnam as Saigon fell in 73 or 5? I forget. 5, yeah. So do you remember those images? Images like this? This is what we call the tale of the tales. So everybody knows what a tale, a story is, but the TAELS, T-A-E-L-S, right? These are thin sheets of gold that are commonly traded in the Far East, okay? And it was one of the preferred methods of owning gold in the Far East. When Saigon fell, there were 2 types of people that basically fled the country. And the reason we know this is because this story is why our company exists. My uncle Michael, his partner Glenn Kirsch, who passed away in 2010, worked for a company called Deke Pereira. At the time, they were the world's largest and oldest non-bank metals and currency dealer. Okay, Mr. Deek was connected. He was trying to think what they call it, the OSS. So the prelude to the CIA. He was fairly well connected, Hungarian refugee of World War II. And he had connections to the State Department. So when he heard that refugees were coming, and they were sending up 5 camps across the U.S. to deal with these refugees, Mr. Deek sent, or had Glenn actually call the State Department and say, where are they going to put the refugee camps? And the next day they had a notice from the State Department saying that they had the rights to the exchange of metals and currencies at the 5 refugee camps for the Vietnamese refugees. So Glenn and Michael packed up and went down to Eglin Air Force Base, one of those 5 camps in the 70s. And you can't do this today, but they actually went down with a briefcase full of a couple $1 million in cash and a bottle of acid. And they carried both of them on the plane with them back then. The acid obviously was for testing the gold, okay? So they went down to Eglin Air Force Base, and what they found were 2 types of people. Both were professionals. Both had worked their entire lives to build up their value. And one of them took that value and converted it into gold. And one of them left it in Vietnamese piastres, the currency of the time for South Vietnam. When they got to America, how much were those piastres worth? Suitcases full of Vietnamese piastres, how much were they worth? Absolutely nothing. When Saigon fell, the value of that currency dissipated. Okay? Can you imagine working your entire life, setting it aside, doing the things you're supposed to do, and then all of a sudden you have to uproot near your consumption stage of life, move to a whole new land, and you have nothing to show for it? That's what a lot of these refugees faced back in 75. Others had converted it to gold, precious gemstones, things of this nature. They were able to travel across borders, start a new life in a strange land, but not from square one, where they had left off in Vietnam. So we call that the tale of the tales. And it's the epiphany, if you will, that got Glenn and Michael to start this company. Okay, to help people understand that you need wealth insurance in your portfolio, and don't think that you're safe just because we have weak, friendly neighbors to the north and south and oceans to the left and right. We could still experience the loss of purchasing power of having all your assets in any one currency, like the dollar or the euro or anything else, Venezuelan, Zimbabwe. And there are other ways that your wealth can be attacked through inflation, taxation, et cetera. So it's worthwhile to have a small portion of your assets in wealth insurance. And hopefully some of these real world examples gave you an idea of why we sell gold. And it's not a get rich quick scheme, okay? If you do decide to buy gold, I want to cover some common mistakes people make, okay? First off, they have no clear goal. If you call our firm, the first thing we're going to ask you when you say, I want to buy this, that, or the other, first thing we're going to ask you is, why are you buying it? Unless you know that, you don't know what form, you don't know how much, you don't know where to store it, you don't know anything else if you don't know why you're buying it in the first place, right? So just like anything else, you need to be goal-oriented, and we're going to ask you if you call us. Store it in the wrong place. I'm a firm believer that if you own no gold, the first time you buy gold, it should be in a physical form, coins, typically from mainstream mint, and you should take delivery directly yourself and hold on to it and store it directly yourself. And then anything over and above a certain threshold, you should look to put in the hands of professionals, storage facilities, even if it costs money for you to store it. And the reason I say that is because if you're buying it for wealth insurance, think back to my rule of what wealth insurance is. It is a store of value in a liquid form, right? If it's stored halfway across the world, is it liquid? Can you tap into it today if you have a medical bill and walk down the street and pay it? No. Okay? So the first step is I buy it, and I take delivery of it to the point where I feel that I have enough to cover any short-term need, and I don't any longer feel comfortable storing it myself. And when I cross either one or both of those thresholds, I start putting it in the hands of professionals, and I start spreading it around in different locations and different programs for the diversity. Because you may be solid one day and I store with you, and tomorrow you may be bankrupt, right? So I want to spread it around as best I can, because the diversity gives me protection, and that's what I do as a prudent investor. The other reason I don't want to have too much stored myself is, what is the cheapest way to store gold? At your home, right? Until it's lost or stolen. That's the most expensive way to own gold or store gold, okay? So at some point, you want to go ahead and start putting it in the hands of a professional, but you want to have something close at hand to meet an immediate need. The bottom line is, it has to be accessible, at least initially, and then you can tap into funds for metals held elsewhere. Buying from the wrong firms. And the next question is my first way of identifying who the wrong firms are. Again, if you know why you're buying it, you'll know what form, you'll know what type of product, where you want to store it, and that'll kind of guide you to the right firms. The other firms you want to go to, honestly, people that have a long reputation. I know that sounds self-serving, but I'm sorry, we've earned it over 37 years, self-serve away. We're not the only ones out there. I don't know if you saw Dana in the background. We've known him for 40 years, of American Gold Exchange, another great guy. He just left. I think he's probably got another place to go to, but there are a number of good dealers. There's a number of shysters out there too. You want to be careful of who you work with. You want to try to get referrals from other people that have worked with you. That's how we've built our business, friends referring friends to us and so forth. The number one way I find to determine if I have the right people that I'm working with is, before I buy anything, and this isn't just gold, okay? If I'm buying any sort of an investment, the first thing I ask them is, when I'm ready to sell it, will you buy it back? If they answer no, I never buy from them, okay? Why is that? I can tell you why in the metals firm, or in the metals industry. A lot of times you'll find people that'll sell something at a horrible margin, okay? They're making a killing off of you. They'll do special minting, or this, that, or the other. They'll do things that don't put the value in what you're buying. They don't put half the effort that Perth Mint puts into those proof coins. They're just trying to sell you something that you can't price, so they could jack up the price and make you pay too much for it, okay? If they don't buy back, that's an indicator that that's what they're doing, okay? Why? Because if they buy it right back, what are they going to do? They're going to expose the horrible margin. They don't want to do that, right? The only other reason I could think of that they wouldn't buy back is because they don't value it in the first place. And if they don't value it, they shouldn't charge me for it. They should just give it to me, right? So either they have no value placed on it, or they have horrendous margins. So if somebody that I'm looking to buy something from says, I don't buy back, and then they get into a song and dance about auctions being a better price and all this other garbage, just run away. Because it means that they are absolutely embarrassed about the margins you're about to find out, okay? Buying the wrong products. If you want to buy wealth insurance, I think rare coins are great for a portfolio, but not for this purpose, right? The underlying gold is very little. The perceived value, because of rarity and the collectability, et cetera, from a rare or numismatic coin is wonderful, and it could bear some fruit for your portfolio. And I do own some, I believe in them, but not for wealth insurance. For wealth insurance, I want to get as much gold or silver as I can for as little as I can in incredibly liquid form, okay? Letting emotions dictate actions. I don't think this is specific to gold. Emotions do not make you money as an investor. If you follow them, you tend to do worse than somebody who's just got an even-keeled approach, sets the portfolio allocation, maintains it, revisits it from time to time to make sure it's still current, talks with other people that might know more, et cetera, than ourselves. But they go about it in a very systematic approach. If all of a sudden the price drops $10, I'll give you an example, and I've got some charts coming up. If gold drops from 1550 on the breakout to 1470 like it did within the past month, and you panic and sell out, you would have missed it moving back up to 1514 and most likely higher as I stand here talking to you today. So you can't let emotion get in the way. You know what these assets do, you look into them, you buy what makes sense for your portfolio, and then you believe in yourself, and you believe in what you've done, and you move forward. If something clearly changes, not a short-term price movement, then go ahead and take action. I usually tell people that if buying gold, because we'll have people that call up and they'll say, I want to buy an ounce of gold, and 2 days later when they're ready to make the purchase, it's up $10 an ounce, and they're like, oh, I'm going to wait. And I'm like, if $10 is going to cause you not to move ahead, I can tell you right now, you're buying it for the wrong reasons, okay? If you buy gold for the right reasons, I don't believe there's a wrong price and a wrong time. I don't think that the people that bought gold, if they bought it for the right reasons at $1,900 an ounce before it fell in 2011, I believe those people made a good purchase. Because long term, gold will do its job. I'm convinced of it, okay? If their goal was to be a short-term speculator, they made a very bad decision, okay? And some of them are still holding it today, licking their wounds. Paying too much, shop around. I encourage everybody to do that. Our philosophy is we are oftentimes the most competitive price. We're not always. We'll always be in the ballpark. And customer service is what sets us apart, but you should always shop. You get 3 quotes for your roof, you get 3 quotes for your car repairs or whatever. Get 3 quotes for your precious metals when you're ready to purchase them, especially if you haven't built up that rapport with any particular dealer, you don't know them well, or you're new to the industry. But by all means, get some quotes and shop. Falling for scams, only thing I could say here, it happens in every industry. If it seems too good to be true, it is, okay? We've been selling precious metals, not me personally, but for 5,000 years, okay? There's no magic potion, there's no silver bullet. It is what it is. You have to move it around. There is a premium. Dealers charge it. Make sure that you're not paying too much, and certainly don't fall for a scam. If something sounds like it's too good to be true, ask somebody who's trusted. Do not do that after you've made the purchase. I've had clients call me up after and said, I think I just made a mistake, and I can assure them they did. Call me first. I'll tell you what's going on if I know, or I'll try to point you to someone who might be able to give you some guidance. And buying counterfeit coins and bars, they're out there, both in the rare coin and the bullion coin market. The best way to protect yourself there is go to a trusted dealer who buys from source distributors. Okay, there's no better protection out there. So the folks that I buy directly from John at the Perth Mint. They buy directly from the U.S. Mint. They buy directly from the Royal Canadian Mint. They're wholesale distributors that buy 10,000 gold kangaroos at a time. And I'm the first level dealer that can access those people. Buy from dealers that buy from source distributors, and that's your best protection against counterfeits. So hopefully some of those points are helpful for folks that are new to the business or new to the industry. I'm going to give you a little bit of a market update. I've already alluded to it. Anybody ever see The Princess Bride? Okay, do you remember the scene with Billy Crystal when the dread pirate Roberts got his life sucked out of him with a bellow or something? I don't know how they did it. But they brought him to Billy Crystal, and the guy says, what's wrong with your friend? He said, well, he's dead. And Billy Crystal said, no, your friend's not dead, he's just mostly dead. Do you remember that line? Okay, this is where gold was about a year ago. It's not dead, just mostly dead, okay? Gold has since broken out. So what happened is gold had about a 10-year run. It went from $250 an ounce roughly in 2001 to $1,900 an ounce in 2011. That was about a 650% appreciation in 10 years, not a bad return, okay? But then it dropped precipitously. It fell like a hot knife through butter from about $1,900 an ounce all the way down to about $1,350, $1,400. And then it rested and then went further. The low point it got to was about $1,050 an ounce. I thought it would hold. So far it has. The reason I thought it would hold is back in, correct me if I'm wrong, John, but I think it was about 2009 when the Indian central bank bought 200 metric tons of gold from the IMF. Okay, everybody was worried that was going to kill the gold price at the time, that how was the market going to absorb 200 metric tons sold by the IMF? And they never had to, because the Indian government stepped in and paid $1,050, $1,048 per ounce for that gold for 200 metric tons. Now, every year, not this year right now, I think the leader is Russia right now, but every year, India and China are either one or two in terms of the world's #1 consumer of gold. Okay, firm believers in gold. They buy a lot of it. They believe in it. And they're very price conscious. They get good pricing for their metal. And they had no problem back in 2009 stepping in and paying 4 digits, $1,050 an ounce for gold. To me, that was the end. And I said it at the time, that was the end of 3-digit gold. It was going to be $1,000 or more from then on. So far that has held, and that is the point that gold hit. That was the low point in December 2013 before it started moving back up and consolidating for a long time, right around $1,350 an ounce in about $100 to $200 range, very narrow for 2 years. Okay, and then it finally broke out. And once it got through 1350, which was a technical resistance, what we really needed to see was it to get through 1400. And that happened in about a blink of an eye. I think a day or two, it was through 1400 and heading higher. The significance of that is we had seen the failed attempt to break that resistance at 1350 for a long time. Okay, 2 years. Had gone up, failed, went back down again. To get through and have people believe it, we really thought we needed to see $1,400 psychologically, okay? We got that, like I said, in about a day or two. It got as high as $1,550. It has since corrected back down to $1,470, and now over the past week or so, we've seen it move back up, and today I don't know where it is now, but I checked this morning, it was about $1,514 an ounce. When something moves down so precipitously with nothing to stop it, technically, right? What does that mean when it moves back up? There was no support, so now there's no resistance, right? And that's what gold's facing. There's really no resistance because there was no support all the way up to about $1,800, $1,900 an ounce, the previous all-time highs. So I don't expect that to happen overnight, the blink of an eye. I think it's going to take some time, and I expect it to be a stair-step approach, which in my opinion is incredibly healthy, okay? Where new highs are higher than the previous, new lows are higher than the previous, but nothing moves up in a straight line. It does this all the way. That's a healthy market, and that's what I expect out of gold from here on. I do believe the breakout is for real. I do believe it's behind us. I don't know where it should go or could go from here. I don't make those predictions, and they're not important to me when I buy it as wealth insurance. But I think right now we're a lot closer to 1,050 than we are to 1,900. And actually, we're probably about midway. But if we look to new all-time highs, I think we're closer to the bottom still than we are to the top. Makes your insurance premium cheap. Silver. Silver follows gold. Gold is your leader in the precious metals complex. Silver follows gold and then tends to outpace it. It's a smaller capitalized market, therefore it is more volatile. So gold will turn the corner from lows, start moving up. Silver will see the trend established, start moving up behind it, and then go further. So back in 2001, when gold went up 650%, by 2011, silver went up 1,000% in that same time period, okay? But it was late to the dance, and then it overshot, okay? When it came down, gold corrected, 40, 50%, classic correction. Silver corrected 60 to 70%, I want to say, down to about 1383 was the low in December of 2013, okay? So silver goes further to the upside, further to the downside, wider pendulum swing, greater profit potential. Silver has now broken out too, as it follows gold up. How we measure this is what we call the gold-silver ratio. How many ounces of silver it takes to buy 1 ounce of gold. Okay? Right now, today as we speak, it's about 82. It's been as high as 90. Anything over 80 typically signals that gold and silver have bottomed. Historically, that's what this chart shows you. A high, the upward peak is a high GSR, above 80. And when that happens, it triggers the bottom of the market for both of them, and they both start moving up, and silver outpaces. So the gold-silver ratio actually comes down as they're both appreciating, okay? And the top of the market is signaled by a low GSR, and that's usually somewhere around 35 to 50 ounces of silver to buy 1 ounce of gold. I raise this because you can do 3 things with this. If insurance is your motive and you see a high GSR, it tells me your insurance premium, and by insurance I think gold always, your insurance premium is cheap right now. Okay? If you are a profit-motivated or speculative buyer of precious metals, I think when you see a high GSR, silver price is low, and it is starting to turn the corner, and now you have that huge pendulum swing of potential, I think silver becomes of interest for a profit-motivated precious metals buyer. If you are a trader, what you want to do at the peak is you want to go ahead and sell your gold, buy silver, because you get more for every ounce, and then when it corrects down to 35 to 50 or wherever it settles on the high point in price or the low point of the GSR, then you sell your silver for gold, because you get more gold for every ounce of silver at that point. So 3 things to do with the GSR. A lot of people trade this on a regular basis. As an insurance person for gold, I think the premium's cheap. That's what I look at right here. So I already talked about this a little bit. The way I hold on to gold is I do what I call the gold 2-step. I'm not a country guy. I grew up in Jersey. But I buy first close at hand to meet any immediate needs, like I explained. Anything over and above what I feel I need to meet a short-term financial crisis, or that I feel comfortable storing myself, I start putting it in the hands of professionals like the Perth Mint or depositories domestically and abroad. If you go that direction, you want to work with folks. When you go into third parties watching your metal, you want to deal with folks that do all the right things. Okay, so they have to have a strong reputation. They have to be highly recommended. They have to have the proper class security of their storage facilities. They have to make sure that every ounce stored there is 100% backed at all times. They need to make sure they do not put your metal out as leasing to third parties. You want to make sure they do not use your metal as backing for derivatives. You want to make sure they have 100% or more insurance on the metals in the facility. Let me give you an example about this, because fractional insurance is common and it should be avoided at all costs when it comes to storage facilities. Some storage facilities will say, okay, I have $100 million worth of assets here for various clients, but because the police department is so close, because our security is so strong, because the reaction time is what it is, and you can only carry so much in a certain period of time, I don't have to insure 100 million. I just have to insure, like, I don't know, 5 or 10 million of it. Okay? And by the time they get away with that, somebody will be here to save the day, right? That's called fractional insurance. It's not okay. It is too common for the best storage facilities out there to have 100% or more insurance for all assets under their roofs at current market value at all times. Don't settle for anything less if you look for a third-party storage facility, and we can help guide you in that respect. We've worked with them for 30, 40 years now. Okay? I'm going to highlight one product. If you do think that precious metals are worthwhile, if you do have your current physical metal directly in your control taken care of first, and you're looking to expand, I want to raise this product with our partner at Perth Mint. 22 years ago, we launched the Perth Mint Certificate Program. Have anybody ever heard of that before? No. Not surprised. You have. Okay. So not surprising. Fantastic program. At the time, you can buy gold, silver, and platinum for 2.25% above the spot price. Okay, sell it back for 1.25% below the spot price, 3.5% round turn, better than buying physical metal. You can have it stored with a government guarantee in Australia, get a certificate showing your ownership with all the insurance, the backing, and everything else, and pay no ongoing storage fees. Fantastic program. Best thing since sliced bread at the time. They've taken it a step further. Okay. All of the products they offer, gold, silver, and platinum, are still available, allocated, unallocated, whatever, at the Perth Mint, but you can access it online, 24/7, encrypted directly yourself. So if you want to get up 2 o'clock on a Sunday morning and buy gold, you can do it. Okay? Minimum for this program, for the Perth Mint Certificate Program, was $10,000 for a new account, $5,000 to add once you had it established. Here, $50 US is the minimum to own gold, silver, or platinum at Perth. Okay, that's the entry price. The margin or the commission you pay on that $50 purchase, 1%. It goes lower from there. Okay, so that's buying or selling. If you buy $1 million at once, you're going to pay 0.2%. Fantastic program. No ongoing storage fees if you choose unallocated metal and gold, etc. Still have all the government guarantees and everything else, and we're working on getting the IRA component in place for it as well. That's not in place just yet. Yes, sir.
Is this, if you were to sell, would you owe foreign taxes on it?
You wouldn't own foreign taxes, but you'd have a gain, right, or a loss that you'd report. So, like I've got Perth Mint metal. I sold some silver, right, at the peak, and when I did, I paid taxes on the gain. So,
I'm wondering if this is considered an Australian asset.
no, it's your asset simply stored in Australia. It is direct ownership by you. Yeah. Precious metals, and I think it's incredibly it's taxed as collectible in the U.S., 28%. So not 20% of the full value, 28% of your gain, right? Yes, sir. And now I'm not a tax attorney. Check that with yours. Disclaimer, but I can tell you that's what it is. Yes, sir.
Can you get this out of IRA money?
The PMDDO is not available for IRAs yet. Like I said, we're working on it. That's my good friend in the back, Darren, is going to help us with that component of it, hopefully. If not, we're going to kick them to the curb and find somebody that can. But we've got a lot of people stacked up that want to own this in IRA forms, and Perth is committed to helping us get there. The Perth Mint certificates are available in IRA forms. Physical precious metals stored domestically are available in IRA forms, and our friend in the back helps us with both of those right now. So he's from Equity Institutional, for what it's worth. Yes, sir. You can. Unlike an ETF, this is your metal. If you want to take delivery, have it show up on your doorstep, just tell me, we'll arrange it. Okay. So if it's an unallocated form, we have to choose the form, fabricate it, make it into a coin or bar of various sizes, and then ship it to you. But absolutely have clients execute that repeatedly over the years. That's actually a good point. I'm going to raise that. I mentioned the ETFs. Does everybody understand how an ETF works? Because I think this is better than an ETF when you look at all the costs, et cetera, and you understand that you're holding physical metal here in your name. Does anybody understand how an ETF works? And more specifically, if you own it or if you don't own it, why a share of a gold ETF is almost never 1/10 of an ounce of gold, and why a share of a silver ETF is almost never 10 times the silver price. Does anybody understand why that's the case? If it's physical gold or physical silver and a share is 1/10 or 10 times, then it should be exactly that all the time, right? What gives? They have a fund manager. Here's a clue, because there's something to manage, okay? what happens is people buy and sell shares of GLD, SLV all day long, right? And the fund manager at the end of the day, or several times throughout the day, I don't know how they do their job, but they look at all the buys and sells, they net it out, and they say, I've got to buy 50 ounces of gold, or I've got to buy 5,000 ounces of silver. What's the problem with that? They can't. They can't. They can't buy 50 ounces of gold, and they can't buy 5,000 ounces of silver. They can buy 100 ounces of gold, bare minimum, from the bullion banks. They can buy 10,000 ounces of silver, bare minimum, from the bullion banks. But they can't buy 50 or 5,000. So if I'm a fund manager, this is where I earn my pay, right? I have to look and say, okay, I need to buy 5,000 ounces of gold or of silver, but where the market is, should I buy 10,000 and go long, short term, or should I buy nothing and be short 5,000 ounces? Okay, they have decisions to make along the way, all right? And that's why most of them either don't at all or make it extremely difficult for you to take delivery of your metal. It's complicated, okay? This is not complicated. Your metal's sitting in the vault. If you want it, we'll send it to you. Okay. Any other questions? I think I'm near the end here. I encourage everybody. I know I'm an outlier here. I've never been to this conference before. I'd like to come to more. The few people I've met already seem incredibly worth talking to. You guys are serious about what you're doing. You're do-it-yourself investors, and I love that. I'm a little passionate about gold. I think you might have seen that so far today, and I think with good reason. I've got a lot of knowledge and experience. I want to share it with you, and if your goals and my goals intertwine, I'd love to help you get to wherever you need to be. Again, I'm a little bit of an outlier. I know this is probably more of an equities-driven clientele, but I am an absolute believer that everyone, no matter what, should have 5-10%, no matter how much your overall portfolio is worth. I think it serves a need, and as you grow your wealth, when I went to my first visit to my financial planner, I thought, okay, I'm going to get all these great insights. He's going to invest me in the best things. And what's the first thing we did? Any financial planners out there? What were you? Before that, what's the first thing we did? We got all my insurance in place. I had to protect the wealth I didn't even have, right? So the first thing they did is they protected the wealth, and then we talked about how to get to having any wealth, right? Same thing with precious metals. For your portfolio, I think the best protection you can have is putting some gold in it, okay? Do that first. Put your insurance in place, then start building your portfolio. Again, it doesn't matter if you're starting out with a little or a lot. I think it's just as important. Relatively, it's just as important, no matter what size of the portfolio. So come visit us. I'd love to talk with you, hear your thoughts, exchange thoughts. I'm going to learn as hopefully as you are. Schedule private meetings with me, and by all means, come by our booth, fill out another one of those slips to win the silver coins. We're going to give them to somebody before we go. That's the easy way to get silver in your portfolio, but you could also call us up and buy it. So do I have any other questions? Yes, sir. In the back? He was quicker, but I'll get back to you, James. Yes, sir. So the question was, do I recommend a testing kit with acid or what have you, or in some cases the Royal Canadian Mint has a machine that you can put it in. It scans it, tells you if it's legal or not, or real or not. It depends. If that gives you the ability to sleep at night, by all means get a testing kit. But understand, most tests destroy the merchandise, okay? So I wouldn't test them all. I'd test them as a sample, but if it allows you to sleep nights, I'm all in favor of it always. I think a better protection is to buy from trusted dealers who buy from source distributors, who buy directly from the Perth Mint or the US Mint or the Royal Canadian Mint, okay? That I think is a better option, destroys none of your material. Great question. Yes, James? Yeah, that's a good question. Was there any advantage to buying a mix of gold, silver, platinum? I could tell you again, at first, when I'm buying insurance, for me, that's gold, okay? Just like any other investment, I think it is prudent to diversify, right? So we usually tell people you got to follow the three-legged stool approach. Don't invest all of your assets in any one country, in any one currency, or in any one asset class or investment. And I think you can corollarily break that down to each individual asset class. So once you get into precious metals, you establish whatever your allocation is for precious metals, and you hold enough of it. I mean, if you're going to allocate $1,500, I'd say buy an ounce of gold, right? 1 ounce coin. If you're going to allocate more than that, or you add to it over time, yes, as you do so, diversify within the precious metals group. Understand they're different. They don't all move in tandem. Platinum and palladium are more industrial. Silver and gold are both industrial and monetary. Gold is almost entirely a monetary metal with industrial applications. Silver is almost entirely an industrial metal with monetary applications. But they both kind of fit the bill of more monetary purchases. But it doesn't hurt to own some diversified holdings in precious metals, in my opinion. So I can't recommend anything because I'm not allowed, but this is my opinion. I can share that. Yes, ma'am. You're going to see typically anywhere from about half to a full percentage point or more, depending on the facility. So it could add up over time. So understand unallocated with free storage if it's available. My holdings at Perth, all of them are unallocated. Now I've had people come up to me and say, well, how do you trust them to know that they're going to keep that metal set aside if it's not a single coin set on a shelf on your behalf? And my answer to that is they've been around since 1890. They're government guaranteed. They're audited more than you can ever imagine because they're a government entity. Their reputation is unblemished. If I don't trust them to do what they say, we're not talking about how I should buy it from them. I shouldn't buy anything from them, right? If they say that this is the program, this is how it operates, and their reputation backs it up, then I take advantage of that feature personally. So, yes, sir.
Don't take this the wrong way, but 35 years or whatever doesn't sound like that long for a metal or an investment that's been around for 5,000 years. I mean, did something happen?
Oh, yeah. Yeah, no, that's a good point. So the question was, we're talking about a 35-year, background or history that we're delving into for something that's been around 5,000 years. Anybody know what happened in 75? We were allowed to own gold again. Okay, something that we weren't allowed to do from 1933 on here in the U.S. And what else happened? I think it was in 71? 72. What did Nixon do? He ended the connection between gold and paper money, okay? So if you think back, everybody says, well, why would I own gold? Americans tend to be conspiracy theory folks, right? It is what it is. So everybody thinks, well, why would I own gold? Because the government confiscated it back in 1933. What's to stop them from doing it again? I will tell you, there's a 100% chance that the government will confiscate gold because they already did it. That's just a probability thing, right? Do I think they will ever do it again? No. I'm not selling fear here. I'm selling prudence, okay? I do not believe the government would confiscate gold because there's no reason for them to do so. Back in 33, gold was convertible with the dollar. And it was not about the government getting a hold of gold. It was about them getting the hold of the gold so then they could reset the official price of gold and devalue the US dollar. That's what they did. Okay? They raised the price per ounce of gold, in effect devalued the US dollar. Okay? And then Nixon broke the tie. So now, what's the incentive to owning gold? It's a tiny market, comparatively. There's not a lot of value there, and certain doesn't get on the radar for the government. Currency market's a whole different story, but gold is tiny. There's no reason for them to confiscate. Yes, sir.
So what was the breakout this year? Gold.
Okay, 1350 was the technical point. Emotionally, psychologically, it got above 1400 in one fell swoop. From about 1420 up to 1800, there's virtually zero resistance.
Why was that? Recession? Fear of recession?
No, I just think it's time. It took a long time, about 2 years, to consolidate right about 1350. Several failed attempts, just the markets doing what they do, and it finally built up enough momentum to break out. You can point to any number of things. It could be the trade war. It could be the at the time the talk of what do you call it? Impeachment, sorry. It's all over the press. You think I know the word. But the talk of impeachment, it was, either military or global unrest, could be social unrest. I mean, you name it. There's all sorts of things going around that are catalysts to move the markets. I will tell you that the markets to me right now seem incredibly sentiment driven. Somebody says something in some obscure part of the world and the markets react. They're all looking for direction right now. But gold, I believe, is doing what it should be doing. It's time. It's done its consolidation. It is ready to move up. I don't expect it to happen tomorrow, and I really don't want it to. I think it should be a slow burn. Commodities markets tend to last 8 to 10 years, bare minimum. So I would expect it to move up over that time. Yes, ma'am. Yeah. That's a good question. So if you look at allocations to gold, should it be based on your investable assets or should it be on your total net worth? Most folks out there talk about investable assets. Personally, I do it for net worth. Now, when you say net worth, a lot of people say, well, I can't do that. My house is worth too much. I don't have that much liquidity, et cetera. And I think, I don't care. Find a way because I think it's that important, but that's me. Most folks talk about investable assets. Yes, sir. We know a company that's doing it. We've been talking to them for about 5 years. And so the question was, is there a way to participate in a gold leasing where basically you lend metal to somebody that has a need, but they don't use it up and they replenish it and you get a benefit for giving them access to the metal in the short term, okay? We know a company doing that. I have not seen a set of terms that were attractive enough to take advantage of. We'll continue to develop that, but I really don't see it. There's another option too where there's companies out there looking to make loans against precious metals. And those terms, in my opinion, that I've seen are even worse. Okay, so if I see something of value, certainly drop your name that it's of interest at our booth, and I'll keep an eye out. We've been looking at both of those things for right now, or for a number of years. I haven't seen anything compelling yet for what it's worth. Unless you're huge, not for individual investors. Yes, sir. Mm-hmm. Mm-hmm. Okay, that's a great question. So if the government in the U.S. says, hey, we're going to take the gold, and do we have the SEC rep in here with us today? No. No, I'm gonna answer honestly my opinion. The bottom line is, does holding it in Australia give any benefit? I personally think it does. Okay, nothing is foolproof. If they want it, pretty sure they can get it. But here's the thing: it's your metal, and when you're at Perth Mint, you work through me or anyone else that sells for Perth Mint, you are a direct Perth Mint owner of precious metals and storer of precious metals, okay? So when it's your metal, who can Perth Mint look to take direction to sell that metal? The government? No, okay? Government will not trigger them to turn over assets, okay? You have to give the direction to turn over assets. I'll give you an example. And I think I can share this if I don't mention names. But we had a client bought $1 million worth of gold, silver, and platinum. I'm not making any judgments. I wasn't involved in the case, but apparently it turns out he was not the best person, and these funds were probably illicitly earned. No way of knowing. So he bought the metal. Came to our attention when the marshal called me, federal marshal called me about, 3-4 years ago, and said, this guy's a bad guy. He's in custody. He's working with us. He's told us he has Perth-Mint certificates. What are they currently worth? And I basically answered, well, I can't deny or whatever, but if he had certificates and if he had bought them at such and such a time at whatever price, then they'd probably be worth about $3 million right now. And he said, okay, great. I need you to tell me how we can go ahead and take control of those assets. And I was like, it's simple. I consulted with John in the Perth-Mint and went back to him and said, it's simple. He has to tell us to sell it. Okay? What if there's a court judgment? Because I'm sure there will be. Like, he has to tell us to sell it. Or what you can do is you can go ahead, if there is a conviction, the U.S. Marshal can reach out to the Australian federal authorities, who can then reach out to the Western Australian authorities and ask them to consider turning over the metal or selling the metal on behalf. And that process took, just real quick, 5 years? Yeah. So, I do think you have some additional protection by it being further away. I joke all the time, Perth-Mint's not at the end of the world, but you can see it from there. So. Any other questions? These are great questions, by the way. I really appreciate it. Yes, ma'am. That's a good question. So the question was, if you have to pay 28% gain from your purchase price to your sale price when you sell precious metals, 28% collectible capital gain, whatever it was, how do they know about it, right? Or do I have to do something? In certain cases, I do. And I can't give you a guide of exactly what thresholds for what metals in what form, but it's that complicated. But when you hit those thresholds, I must file a 1099-B form when you sell it. And you'll get that in January, the year after you sold it. Whether you sold it in January or December, come January the next year, you're going to get a 1099-B from me, copy of what I submit to the government. Okay? In some cases, when you sell, it's going to be below those thresholds and I don't report it. Okay? You can find out what those thresholds are. It's on the IRS website. If I told them to you, I'd be coaching, and that's illegal. But the bottom line is this, and this is what I tell everybody. Unless you look good in a Dayglow jumpsuit, pay your taxes. Okay? Whether I report it or not, if you have the obligation, pay it. When I sold my silver, I sold less than the threshold, and I paid my taxes. Then I don't have to look over my shoulder every day. And they don't take all of it. They just take a portion, big one, but a portion of the profits. Okay? Anybody else? Yes, sir.
It's only when you sell it's reported.
Exactly.
Whatever the capital gains rate is at the time, is it different?
It's different for precious metals. Again, consult your tax attorney. I am not one, but 28% collectible rate for precious metals. Yeah, we thought for years that was over, the playing field was not even between equities investing and precious metals investing, because you're paying 28% here and you can pay, 15% or whatever on capital gains. And it wasn't fair because gold in the form of wealth insurance or whatever is not a collectible. You're buying physical metal. It's an asset. It's just like a stock. In that regard. So we think it was incredibly unfair, and we thought at some point our industry council for tangible assets, ICTA, has been lobbying for years to get that change and get the playing field leveled for precious metals investors. And it looks like the playing field will eventually get leveled, but up at 28%, probably not down at 15%, unfortunately. Yes, ma'am. Again, not a tax attorney, but I actually believe it does step up based on the value at your death. Yeah, I do believe.